Good morning, everybody. Welcome to the Morning Volatility Report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com. Welcoming you to our Morning Vol Report. Yesterday we did talk about the ECB taking extraordinary measures, but pretty much I think Draghi said, I'm not sure, we're not going any lower with our negative rates. Don't know what that means, but of course they'll buy corporate bonds. They'll buy all kinds of bonds. Um, I'm not too worried that we are starting to generate the new Weimar Republic in the G7 nations, but nobody else seems to be worried about that either. But be that as it may, the markets seem to like it. At least the algos like quantitative easing. Uh, I wondered when that is all going to change, but for right now, they still like it. And basically, we have tried not to fight any particular trend in 2016, and I'm not about to start to do it now. I think the key is just being nimble. So as far as that goes, you have a good markdown in volatility. We have our kind of standard 1% move, which has been happening with some regularity. And it doesn't look like any of that is going away. And I think usually with the rally this early in the morning, I'm just content to let it go. Piece out the deltas that you might have, and look for an inevitable. I don't know if it's inevitable, but possibly set up for a pullback the other direction. So the market is still paying you to be selective about what you want to own, as long as you get rid of the deltas, or you unload your longs when you get the rallies. When you get the sell-offs and everybody's freaking out, you got to close your shorts. It's just, that's the way it's been. Where we are now, though, is we are now, I believe, at least firmly in highs for this year. Right, there we go. So we are, at least as far as this year goes, we're up a few percent. Things are moving along. And ultimately, now that we have just Yellen coming out, which it's doubtful they're going to do too much with the ECB basically generating negative interest rates, and we have the only positive rates. Hopefully that trend does not change, meaning the U.S., I think, just continuing to maintain that things are okay here, and trying to just inch rates up slowly but surely, hoping at least, I don't like that four-letter word, but hopefully that trend continues. For everything else, what I would just say here is, again, being selective. What it's harder to find are really some things to do that have some edge. I feel like the volatility, the market for vol, and at least in the index wise, the realized vol is getting a little lower. Implied volatility is getting a little lower. It feels like the index volatility is even getting harder to do things in than it was before. Name volatility, or names, seem to be moving around enough, but it just feels like we're kind of at this, okay, we're going to hang around the 200 level and be somewhat pinned to it until we can come up with a better idea. So that's what it feels like. The squeeze that we have in the commodities seems to have subsided somewhat. We had what I would only call substantial movement in here. It is now sort of stopped. If it picks up again because there's the potential for global growth, certainly possible. But at least for a while that's slowed down. Just looking at USO, I believe oil now is at, again, if it's not, I think it's at a almost 39. I think we're at a high for the year. I'm just looking at CL, a high for 2016. I'm pretty sure. Yep. Yep. The contract trades at a high for the year, I think, today. Let's see here. Yep, for sure. Not even close. We were start of the year at 33 and we rolled in at 37.55. So we're rolling in basically for a high of the year right now. Okay, that says something about, again, the insolvency of all these littler companies. There was a big problem with the rolling of debt in a lot of the producers. A lot of the equities on those companies got squeezed. So there's been a little bit of oil and gas merger activity, but for the most part, I think we're in kind of a strange area, whereas I don't think we have enough reason to really rally hard, because now we're up for the year. Whatever panic everybody was worried about short term just hasn't materialized. But again, what does it take for us to go higher? And I just don't see a lot. So I think we should price, again, we'll try to price butterflies. We'll try to price anything sort of near the money. We started looking at stuff yesterday. I think maybe we should look at it again today. As we have another central bank thing, so that the market tends to just hold up and not do very much. So I think we take that and sort of run with it. I'm not expecting us really to drift too far away from this 2,000 handle in the SPX for the next few days, unless we get some strange overnight news or something like that. It just feels like we're kind of stuck at this level. And we'll wait for some leadership to come from somewhere. All right. And with that, I will talk to everybody very soon in our chat room. Normal schedule today, everybody. Oh, we have our Friday schedule. All right. Bye-bye.